Hello friends, welcome to MAT Accounting for Joint Stock Company. Under this we are going to discuss in this video a financial statements of a company format under Companies Act 2013. A meaning of a financial statements. A financial statements are the basic and a formal annual report through which the corporate management communicates a financial information to its owners and various other external parties, which includes investors, tax authorities, government, employees, etc. Let's see little detail. Every registered company must prepare financial statement according to Companies Act 2013 to communicate with its owners, as well as they need to communicate with investors, tax authorities, suppliers, employees, etc. Basically, a financial statements are divided into three according to Companies Act 2013. Number one is a statement of profit and loss account. Number two, balance sheet. Number three is an cash flow statement. According to 2013 Act, the cash flow statement included as new. Before 2013, in the financial statement only two statement used to prepared. One is a statement of profit and loss account and the balance sheet. In 2013 Act only, the cash flow statement also included as a mandatory statement. In this video we are going to see the format for statement of profit and loss account as well as balance sheet according to Companies Act 2013. Let's see the statement of profit and loss account and balance sheet format. Now we will see the statement of profit and loss account according to Companies Act 2013 Schedule 3. Number 1, statement of profit and loss account for the year ending 31st March. So we should write the heading. Then we should make the format of particulars, note number and amount. Statement of profit and loss account basically divided into two. One is an incomes, another one is an expenses. Under incomes, we need to record all the incomes of the company, whether it is direct income or indirect income. So we need to record under incomes. Further, incomes are divided into two, as in revenue from operations, it is in sales, and other incomes. Under revenue from operation, we need to record a total sales of the company in that financial year, and under other incomes, we need to record other than sales if any other income received by the company during the financial year, like rent received, interest received, etc. So we'll come to know what is the total income of the company. So under other incomes we need to record it, and we'll come to know a total income of the company when we add revenue from operations as well as other incomes. And next is an expenses. Under expenses, we need to record first cost of materials consumed. A cost of material consumed is a total amount of material used by the company in the financial year. We need to record under this. And next is an purchase of stock. During a 12 months period, whatever goods purchased by the company, we need to record under purchase of stock. Next is an changes in inventory. Under changes in inventory, the difference between opening stock and closing stock, we need to record it. Next is an employees benefit expenses. Under employees benefit expenses, whatever expenses paid by the company to its employees, we need to record it. Next is an finance expenses or finance cost. Under finance cost, we need to record only interest paid by the company on its borrowings, only we need to record it. Next is an depreciation and amortization. Depreciation amortization is a loss of the company. If any assets decreased, we need to record under depreciation and amortization. If tangible assets decreased, we should record under depreciation. If it is intangible asset decreased, and we should record as amortization. So any losses on assets of the company, we need to record under depreciation and amortization. Next is an other expenses. The expenses which is not coming under this category, so we need to record under other expenses. So when we add all those things, we will get the total expenses of the business. After finding total expenses, we need to calculate profit before tax. So if we want to know profit before tax, we need to take a total incomes of the business as a total A, and we need to minus total expenses at total expenses B. So A minus B, so we will get the total profit of the business. A profit before tax will come to know. Then we need to minus tax. After deducting the tax, we will come to know what is the profit after tax of the company, we call this PAT. We need to prepare working note for each item given in the income as well as for all the items of expenses. After preparing working note only, we need to record the total amount here. The working note number we need to record here under note number. For example, when we open revenue from operation as a note number 1, and we need to record note number 1, that working note amount we should record under amount column. Even likewise, when we do working note for other incomes, we need to prepare separately working note for other incomes. That working note number we need to record here. The total amount we should record in the amount column. Likewise, for each and every item, we need to open working note separately. Whatever amount we are getting in the working note only, we need to record under amount column. Then that working note number we should record under note number. The working note I gave at last, so you can go through. Now we will see the format for balance sheet of company under Companies Act 2013. So we should make the format of particulars, note number, amount, and the balance sheet we are divided into two. One is an equity and liability, and number 2 is an assets. So first we'll discuss about equity and liability. Under equity and liability, further we are dividing 3. One is an shareholder fund, and number 2 is an non-current liability, number 3 is an current liability. If you see in this heading itself, the Companies Acts divided as equity and liability. Equity means it is a shareholder fund in the business. So this equity indicates shareholder fund. Shareholder fund means whatever the shareholders invested into the company, so we need to record under shareholder fund. So share capital is an shareholder fund, and reserve and surplus is an shareholder fund. Reserve is an savings of the business for future purpose. The company used to keep out of profit certain amount for the future purpose, that is in reserve. And surplus, after meeting all the expenses, if the company have any amount as extra, that is in surplus. So a share capital as well as reserve and surplus goes to shareholders only. So we'll call the citizen owners fund. Then liability we are dividing as non-current liability and current liability. Non-current liability means it is an obligation actually. This obligation the company need not to meet within 12 months. The company should meet this obligation after 12 months. Under this we should record long-term borrowings, other non-current liabilities, long-term provisions. Current liability means this is also an obligation, but the company need to meet this obligation within 12 months period. So current means present, liability means obligation. So within current period means within 12 months the company should repay this amount. Under this we should record short-term borrowings, trade payable, other current liabilities, short-term provisions. Before recording amounts into the balance sheet, we need to prepare the note. It's called as working note. We need to prepare for each item appeared in under the headings like share capital, reserve and surplus, long-term borrowings, like all the items we need to open the working note. So whatever we are getting the amount in the working note, and we should write working note number here, then we should record the amount. End of this video I given the working note that you can go through once. Now we will discuss assets. Assets is an resources of the company. Assets we are classified into two. One is an non-current assets, number 2 is an current assets. Non-current asset means the asset bought by the company for the long-term use. Such asset called as non-current asset. Under non-current asset further we are classifying fixed asset. Under fixed asset further we are dividing tangible asset and intangible asset. Tangible asset means the asset which we can see, which we can touch, and we can convert into money. The asset which we can see, which we can touch, which we can feel, and we can sell it and we can convert into money, called as tangible assets, example land and building, machinery, furniture, etc. An intangible asset means the asset we can't see, we can't touch, but we can feel, even we can convert into money, is an intangible asset. For example, goodwill, patent rights, copyrights, all those things, intangible asset category. Next is a non-current investment. This non-current investment means the company invested in debenture shares of other company for long term, that we should record under non-current investment category. Long-term loans and advances. So long-term loans and advances means the company given loan, either advances to outsiders for the long term. Long term in the sense it's in more than 1 year. So we should record under long-term loans and advances category. Next, other non-current assets. If any other non-current asset, we should record under this category. So this non-current asset means the asset bought by the company going to use that particular asset for more than 1 year, called as non-current asset. Next we will see current asset. Current asset means the asset bought by the company will convert into money within 12 months. It's called as current asset. Current means present, asset means is in resources. The current asset means the company going to convert into money within 12 months. Under this we should record current investment. Current investment means the company invested outside of the business, but the company invested for short term, maybe less than 1 year. Inventory, it is in stock. A stock of the company, a company will sell as soon as possible. The company will not keep as a long term. So inventory is an current asset. Trade receivable, this is when company is selling the goods on the credit basis and the company will receive the money within short period, that is a trade receivable. Cash and cash equivalents, anytime the company can use cash and cash equivalents. And short term loans and advances, this company given loans and advances for less than 1 year. The asset which we are going to convert into money within 12 months in that financial period, called as current assets. When we record the items in the liability side as well as asset side, we should not change the order of whatever given in the Companies Act 2013. We need to follow as it is. Like liability side, we've seen 3 headings: shareholder fund, non-current liabilities and current liabilities. Under that, what and all headings is given, we need to follow as it is. We should not interchange any heading. As well as asset side also, non-current assets as well as current asset, like whatever the order is given, we need to follow the same order. And before recording the amounts into the balance sheet, we need to prepare the working note. According to working note only, we should record the amounts in the amount column. The working note number we need to record under note number. Let's see the working note of each heading in the liability side as well as asset side. And also we'll see statement of profit and loss account. I gave possible items in each and every heading of the balance sheet as well as profit and loss account. Let me go through one by one. Share capital. Under share capital, the possibilities is equity share capital as well as preference share capital. We should make a total. This total only we should record in the balance sheet. Next is in reserve and surplus. Under reserve and surplus, general reserve, reserve fund, capital reserve, capital redemption reserve, securities premium, debentures redemption reserve, other reserve and surplus we need to record. And after total this, we need to record under reserve and surplus. Next is in long-term borrowings, debentures, secured loan, unsecured loan, public deposits, term loans, other long-term loans, bonds, etc. So we should record under this heading in the working note, and the total amount we should record under long-term borrowings. Next is in long-term provisions. Under this, provision for employees benefits like gratuity, leave, encashment, etc. So we need to record whichever kept as a long term for the provision. Then we should make a total, and that total we should record under long term provisions. Next is in short term borrowings, bank overdraft, bank loan for less than 12 months, other borrowings which borrowed by the company for less than 12 months, we need to record under this short term borrowings, and the total amount we should record under short term borrowings in the balance sheet. Trade payable, creditors and bills payable, we need to add this amount we should record under trade payable heading in the balance sheet. Other current liabilities, income received in advance, expenses outstanding, unpaid dividend, etc. So we should record here, we should make a total. The total amount we should record under other non-current liabilities. Next is in short-term provisions, which is provided by the company as a provision for less than 12 months, we need to open a working note and we should record under this like provision for taxation, proposed dividend, etc. The total amount we should record in the balance sheet. Next is an assets, tangible assets. Tangible assets like land and building, plant and machinery, furniture, other fixed asset. After deducting depreciation, the net amount we should write under tangible assets. Next heading is an intangible assets. Under intangible asset, we need to open the working note and we should record goodwill, patent rights, copyrights, trademark. Okay, after deducting amortization, so we need to record the amount into the balance sheet asset side. Next is an non-current investment. Investment in property, investment in securities, investment in mutual funds, investment in bonds, shares and debentures. So we should open the working note for non-current investment. Then we need to total here the total amount we need to record under non-current investment. Next is an trade receivable. Under trade receivable, we need to open the working note and we should record bills receivable, debtors, bad debts and RBD we should be adjusted. After adjusting RBD and bad debts, the net amount only we should record under trade receivable. So after total here, the total amount we should record in the balance sheet. Next is an cash and cash equivalents. Cash in hand, cash at bank, even marketable securities which we can convert into cash within short period, we should record. We should open the working note and we should record under this the total amount we should record in the balance sheet. Next is then short-term loans and advances. Loan to employees, prepaid expenses or any other short-term loans given by the company. So we should open the working note for that and we should total here. This total we should record in the balance sheet. Next we'll see the working note for statement of profit and loss account. Revenue from operations is nothing but sales, but we need to open the working note for that. Then the total amount we should record under revenue from operations. So we need to adjust like cash sales plus credit sales minus, if any sales return we need to minus here. The net amount we should record under revenue from operations. Next is an other incomes working note we need to open. Under this we should record interest received, dividend received, rent received or any other incomes received by the company other than sales. So under this working note we need to record it and that the total amount we should record in the income statement. Next is an purchase of stock. Under this, so we need to record cash purchase plus credit purchase minus purchase returns. After adjusting, we need to record the net amount under purchase of stock in the statement of profit and loss account. Next is an employees benefit expenses working note we need to open. Under this, we need to record salary, wages, staff welfare expenses, contribution to PF, ESI, any expenses related to employees. We need to open the working note. We should record under this and the total amount we should record in under employees benefit expenses in the profit and loss account. Next is in a finance expenses, or we call this as in finance cost. Under this, interest on borrowed loans like interest on debenture or any other loans borrowed by the company, for that the company need to pay the interest. That interest we need to open the working note here and under this working note we need to record it. Then the total interest only we need to record under finance expenses or finance cost. Next is then depreciation and amortization. We need to open the working note for depreciation and amortization. Under this, depreciation on machinery, building, furniture, any tangible asset we need to record under depreciation, and amortization on goodwill, patent rights, copyrights, etc. For any intangible asset we need to record under this category. So usually the word we are using depreciation for tangible asset and amortization word we are using for intangible asset. We need to open the working note as a depreciation amortization. We should record under this the total amount we should record in depreciation and amortization. Next is then other expenses: rent, rate and taxes, office lighting, insurance, printing and stationery, trade expenses, repairs, motor vehicle expenses, postage and telegram, general expenses, sundry expenses, office expenses, general charges, telephone charges, director fees, auditor fees, legal expenses, bank charges, advertisement, traveling expenses, commission paid, discount allowed, carriage outwards, like etc. all other expenses we need to record under other expenses category, and we should make a total of all those things. This total only we should record under other expenses category. So hope you understood this particular concept of Companies Act 2013. If you like this video, subscribe my channel. Thank you.